How much time should someone expect to have to put into this program in order to make it run the way, with the highest expectations of being able to get returns? Like how much time do they have to spend a day?
Really, the spreadsheet does all the work for you. So you can either update it yourself, or you can come to the website and download the current comments and the notes and all of our signals. So you'll know immediately whether the market is going up or going down based on market timer signals. And so it really only takes about 10 or 15 minutes a day. All the hard work is already done for you. All you have to do is go and log in, download the spreadsheet, open it up. You'll see our notes and comments. You'll see the supply and demand figure for that day. You'll see the volatility figure for that day. You'll see where the balance of power is, either on the bullish side or the bearish side, and our comments on it. And you'll know immediately, within just a few minutes of opening it, whether the market's going to go up or down. And so you should know whether or not you should liquidate a position that you're already in, or you should get into a new position.
That's excellent. So what type of instruments do customers generally invest in who are using your program?
Right. That's a great question. Market Timer is specifically geared towards broad market indexes. So, there's a lot of talk right now about indexing. So everybody invests in indexing. Well, indexing is terrific. You just buy the S&P 500, or you just buy the Dow Industrial Average or something like that, and you just forget about it and leave it and let it go. The only problem with that is that occasionally there are price shocks. So for example, we're celebrating today, in fact, the anniversary of the 1987 crash. The market had been going up perfectly, all through August and all through September, and then all of a sudden we started getting some large declines in the market. Well, everyone who was fully invested in the market at that time said, oh, you know what, a little pullback is not going to hurt my portfolio. The problem is you're emotionally invested in your portfolio. And so when you see that your portfolio is going down day by day, you start to get a little nervous. And that's exactly what happened on October 19th at 1987. All of a sudden, people are waking up and the market was down like 100 points like a few days before the weekend, and then it was down 50 points. And believe it or not, a 100-point decline in those days was the largest decline that the Dow Industrial Average had ever experienced in the history of the Dow. Wow. And so people were starting to get nervous towards the weekend. And by Monday, everybody was so nervous about it, you could see that crowd behavior starting to take effect, the herd behavior, where people were just like jumping off the cliff, selling and selling and selling. And there was no market, really. Even though the Dow was down 500 points, there was no market at that time. So what Market Timer tries to do, and does very, very well, is time your investments so that you don't have those price shocks, so that you can move into and out of the market without the 1,000-point decline that we saw, the flash crash of August of 2015, the 1987 crash. It will at the very least, give you a heads up that, hey, there could be a large decline coming, because we're starting to see that selling behavior and the crowd behavior starting to move towards the sell side. So Market Timer actually gives more insights into buying and selling opportunities than any other tool out there. We guarantee that. There is not another trading tool anywhere at any price that gives you the actionable insights that we do as far as opportunity go in the market. Computers now, computerized trading takes up about 90% of the market. And so you need new tools in order to measure the buying and selling pressure in the market. And that's one reason why Market Timer is really the right tool for right now. You can look at price patterns, but you're not going to have insights into the inside of the market using fundamental market data that we analyze in Market Timer. Now, we've identified, of all the internal market data that's available, we've identified the 5 that are most important. And we've narrowed it down to these 5 pieces of data that you can input into the spreadsheet yourself, or you can download it as we update it on a daily basis. But it really gives you an inside look into the market. So, for example, if you look at price action, you look at a price chart, you can see, some information about supply and demand in that chart. But it doesn't tell you everything. If you look at volume that goes along with that price chart, it gives you a little bit more information. But we use internal market data, and it really is like pulling away a curtain and looking inside of the market that will tell you exactly what the market is doing without looking at price. So in other words, it's just like taking an x-ray of your body. You know, you're not feeling well. Why aren't you feeling well? Well, there's something going on inside, and so the doctor might recommend, well, let's do an x-ray. And the x-ray will tell him exactly what's going on inside of you, but you can't tell from the outside what that is. Well, Market Timer does the exact same thing to the market. It really pulls back the curtain, it does an x-ray on the market, and it shows exactly what kind of buying or selling or supply and demand is in the market at any one time. So we can accurately measure, track, and quantify the supply and demand in the market on every single trading day.